Last week, a lot of attention has been on the PayPal stock, which triggered a large number of conversations and movements from investors and market participants alike. We're going to do a follow-up to address the questions and comments that many people have asked on different online forums. Before we begin, if you like my content, please consider to like, comment, and subscribe. We are still a very young channel, and your help is greatly appreciated. With that being said, let's get started with today's topic. People seem torn between their hope for the company to do well and their concerns about certain factors that are showing up. This divergence in opinions highlights a crucial point. People often focus far too much on the narratives and stories and overlook the actual numbers and fundamentals. A snapshot of PayPal's stock performance over the years presents a significant contrast. The all-time high of $310, reached just a little over 2 years ago, stands in a stark contrast to its recent price of $63. This significant sell-off, despite increased revenues and profits since the all-time high, raises a critical question. Why has PayPal's share price decreased nearly 80%? The main takeaway here is that stock prices tend to shape news narratives, rather than the other way around, and the same thing happened with PayPal. When the stock price falls, the negative news often follows. This emphasizes on the need for a solid investment process that remains unchanged by short-term market fluctuations. Or rather, this is what many would like us to believe. In reality, things tend to follow which direction the wind blows, and right now fintech is not necessarily a place that capital is looking to expand in. Despite the recent downturn, PayPal has an established presence and occupies a trustworthy position in the hearts of many consumers. Its reliability in handling online payments has made it a preferred choice. Trust is a vital component of a company's long-term viability, and PayPal seems to have successfully ingrained this within its identity. In addition to the established presence, PayPal is also present in the cryptocurrencies. By launching its own stablecoin to facilitate online transfers will certainly take some time and even trial and error to function. But at some point I do expect wider adoption outside of the PayPal ecosystem. It's also essential to grasp the intricacies of the investment process and risk management. The stock market is inherently uncertain, and even the most seasoned investors can make mistakes. Implementing a systematic investment process that evaluates a company's intrinsic value and ensures a purchase price below that value can provide a safety net against market volatility. Taking a closer look at PayPal's potential using our stock analyzer tool, several factors come into play. The tool considers different revenue growth assumptions: low at 4%, middle at 7%, and high at 10%. Profits and free cash flow margins are also assessed at various levels to accommodate potential variations. We should point out that PayPal has been able to generate profit throughout most of its existence, although it's crucial to consider the impact of lower than expected profit margins. The lower margins might stem from the company's expansion and growth potentials. Notably, PayPal initiated share buybacks when the stock was at a low of $95 and a high of $196 in the first quarter of 2022. This move highlights management's focus on enhancing shareholder value. Of course, we can always look at the other side of the medal and criticize this decision for not using the fund to optimize the operations instead, and this would be an endless conversation between the immediate interest of shareholders versus the long-term development of the company. PayPal is not the first being caught in this dilemma nor the last. The company's historical performance illustrates its resilience amidst market volatility. Analyst estimates also suggest robust double-digit earnings per share growth and revenue expansion. However, comprehensive research and due diligence are imperative before making investment decisions. Ultimately, investing in PayPal or any other stock demands an understanding of the company's fundamentals, a disciplined investment strategy, and the readiness to navigate market fluctuations. The key lesson remains: prioritize long-term fundamentals over short-term narratives, and invest based on a sound strategy aligned with your financial goals. In conclusion, PayPal's recent stock performance underscores the significance of focusing on intrinsic value rather than getting carried away by narratives. The stock analyzer tool provides insights into PayPal's potential, factoring in revenue growth, profit margins, and other crucial elements. My recommendation is to buy a small stake in PayPal in case the worst of the storm is behind us. Overall, PayPal is a good company to invest in for the medium to long term, and to be careful not to put in all your allocation in the short term.